change gears here and talk about a loan product, particularly as it relates to retirement mortgage. Now, you all know about reverse mortgages, or I think most of you do, I'm sure. But you know what? Not every person, not every homeowner who wants a reverse mortgage is able to get one. So I wanted to introduce to you another alternative to reverse mortgage that's pretty interesting. It's called equity avail, and it's pretty revolutionary. And what this involves is it's a program for homeowners who want a reverse mortgage but are unable to because they don't have the cash to contribute to the transaction. In other words, the reverse mortgage amount they can get is not sufficient maybe to pay off their existing loan or to get the amount of cash that they need. In other words, they have to contribute cash to close the transaction. And this program is a little bit unique in that it's homeowners near or in retirement. Well, what do I mean by near? Well, one benefit of this is that you only have to be 55 years old to be eligible, not the usual 62 for a reverse mortgage. So that gives an opportunity for someone who's nearing retirement to get a reverse mortgage-like product without actually being 62 years of age, because this equity avail is essentially it's kind of a reverse mortgage hybrid. So what are the criteria to be eligible for this product? Well, again, you have to be 55 years or older. All borrowers have to be that age or older. You do have to have an existing mortgage with at least 10 years remaining. And with this program, what you'll do is you'll make partial interest-only payments for the first 10-year period. The purpose of the interest-only payments is to help defer the negative amortization that would otherwise occur by not making any payments at all, which is how a reverse mortgage would normally work. This loan actually provides loans for a minimum of $100,000 up to a maximum of $4 million. So even those multi-million-dollar properties, the owners of those properties, if you're near retirement, 55 plus, this could be a good option for you. Now, unlike a standard reverse mortgage, you do have to have some minimum credit score, in this case, 680. The other thing is you do have to meet a debt to income ratio. The standard is 43%. However, if you don't meet that debt ratio of 43%, you can still be eligible for the loan using a residual income approach. And what's really neat is residual income is based on the loan amount size, not the number of individuals in your family. So that's a little bit more flexible residual income target to meet. And quite often, for a homeowner who doesn't meet the debt ratio requirement, this residual income alternative is the way to make it work. And what happens after 10 years? After 10 years, you don't make payments anymore unless you want to. Again, just like a reverse mortgage. Again, remember, reverse mortgages, you don't have to make a monthly payment unless you want to. Most folks don't realize that. Same with this. After 10 years, you no longer have to make a mortgage payment, but you can if you want. And then the only other thing you have to keep aware of is you do have to maintain your insurance and taxes, your property insurance, your property taxes. In fact, when this loan is set up, you actually have an impound account, also known as an escrow account, to pay your property taxes and your insurance, just like your existing first mortgage probably requires. So that's the only thing you have to maintain even after that 10-year period, when you don't have to make payments anymore, again, unless you want to. So this is a great alternative for someone who's either nearing 62 but not there yet, or they are 62 or older, but maybe their loan balance on their current home is too high so that the reverse mortgage doesn't give them the benefit to get rid of that first mortgage without contributing a large amount of cash to make that happen. And what a lot of folks don't realize is over 1 million homeowners who are over 60 years old have a first mortgage on their home. In fact, about 50% of homeowners in that age group have a first mortgage that they'll never live long enough to see them paying it off. So this is a good way to reduce your monthly payment, create some liquidity, even if you're not at that 62 years of age for a reverse mortgage, or if you don't have enough cash liquidity to contribute to getting rid of your existing first mortgage to enjoy that period or that lifetime of no monthly payments. So if you have any interest in this, if you know anybody who's tried to get a reverse mortgage and was unable to, or maybe you yourself have tried and were turned down because your first mortgage balance was too high, get in touch with us. We'd love to give you some numbers. This could be a great option for you.